What's up guys, my name's Curtis and welcome to 5 Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. When buying a house, there are a lot of different ways to finance that purchase, and one of the most popular mortgage options for first-time homebuyers is the FHA loan. FHA loans get their name because they are mortgages that are insured by the Federal Housing Administration. Basically, the FHA tells the lender that they will insure that loan assuming the borrower meets certain criteria. This allows the lender to offer more favorable terms to the borrower, such as a low down payment or lower credit score needed. FHA loans are more favorable than traditional loans in the following ways. Mortgages backed by the FHA allow down payments as low as 3.5%. This can really help out first-time home buyers who don't have a full 20% down payment saved up. They allow credit scores as low as 500 to qualify for these loans. Now, if your credit score is between 500 and 579, they will require a 10% down payment, but if your credit score is 580 or higher, that's where you can get that 3.5% ultra low down payment option. FHA loans allow a debt-to-income ratio up to 50% in most cases, which is much higher than lenders typically allow for traditional mortgages. Lastly, FHA loans can be pretty flexible in terms of where your down payment funds are coming from. Friends or family can gift you that down payment money, or oftentimes you might even qualify for a grant that will cover your down payment for an FHA loan. Now, mortgages insured by the FHA do have drawbacks as well. The most obvious one being, with a 3.5% payment as opposed to a more traditional 20% down payment, your monthly principal and interest is going to be a little bit higher. This often doesn't deter people from an FHA loan, but it is important to know up front. The worst part about FHA loans, in my opinion, is the required mortgage insurance. A mortgage insurance premium is automatically built into every single FHA loan, and this mortgage insurance sticks with you throughout the entire life of the loan. If you put down 10%, that mortgage insurance is only going to stay with you for 11 years, but that's still a long time to have that extra monthly charge tacked on. Lastly, the property that you're buying with an FHA loan needs to be inspected to make sure it meets very strict health and safety standards, but if you're buying a new home, you probably want your home to meet those standards anyway, so this really shouldn't be a big deal. There are a few different types of FHA loans, the most common being the 203B, which is used to fund a traditional home purchase. The FHA 203K loan can be used when the property you're purchasing needs some rehab. This loan would cover the costs of the purchase price of the home as well as any rehab costs that are needed. This could be a great option for anyone who wants to do what's called a live-in flip, where you live in the house while you flip it so you can sell it for a profit later. There's also a CP loan that the FHA insures, and this would be a loan for land as well as the construction of a new home. Lastly, you can get loans that are insured by the FHA that will allow you to fund home improvements as well as energy-efficient upgrades to your existing home. All in all, FHA loans are great for homebuyers who either don't have a huge down payment available or maybe their credit isn't where they want to be, but they want to purchase real estate. With that being said, you are required to pay for mortgage insurance on these loans, and your monthly principal and interest payment is going to be slightly higher with a 3.5% down payment as opposed to a 20% traditional down payment. It's also important to note that you can only have one FHA loan in your name at any given time, so just a heads up that you can't go out and buy 10 different homes using an FHA loan all at the same time. If you guys enjoyed this video, it would really help me out if you gave it a thumbs up, and if you're new around here, consider subscribing and hit that notification bell for more videos in the future.